Ramesh, very good to see you after a long time. I must start by asking you how you're looking forward to 2022 because, after many years, this easy global money, which has been such a big underpinning of this bull run, is probably on its way out. So how do you see markets doing in the backdrop of that in 2022 as we learn to deal with rising interest rates after so long?
Thanks, Udyan. Thank you for inviting me, and it's great to be back on with you after so many years. And Happy New Year to Abba too. Udyan, I think 2021, as you pointed out, was actually very good for our wealth, but very poor for our health. But I think 2022 promises to be good and bountiful for our health. I think we're now at the end stage of this pandemic. It's going to become endemic, I feel, and also good for markets. I personally believe that we enter this week has been a very good week for the Wall Street, the best start in 20 years. And I think the rest of the year will be pretty positive too. I think we're moving to a sweet spot for India. And I remain, optimistic. I think the bull market that started in 2019 is well and alive and will probably take us a lot higher.
So you're in the camp which believes that we are going to make a new high this year, despite predictions of all this volatility and inflation fears, etc. You think we'll take out that nifty high and make a significantly higher peak this year?
Almost certainly, I feel that, Udyan. Let me just put the intellectual case for this bull market to you, and then we'll talk about inflation if you want. Udyan, the two pillars or the two poles of the global economy have been, of course, US and China, and both of the last decade have added a lot of heft to the markets. But they're now moving in slightly different directions. The Chinese want what they call common prosperity, which sometimes means cutting down their businesses to size. And the US is starting as a great socialist experiment, like the Great Society of the 60s under Joe Biden. In any case, it's under some sort of political gridlock going on there. But what we are seeing in India is perhaps, someone rightly pointed out that China made the physical world, India will make the digital world. So I think we have a unique opportunity. The reform process that has started in India, the cutting of corporate tax rates, the PLI, the disinvestment, I think will all add up to our place in the sun. And I believe that the smart money in the Wall Street has kind of figured it out, that if we, do our act right and get our act right, this could be a long and sustaining bull market that we've talked about for maybe 30 years, but this could be the real McCoy, if you believe, at this time. Now, here's the intellectual case with him that I think Larry Summers put it best when I heard him. He said that if India can grow at 8%, and we're growing at about 9% right now from albeit a low base, if we grow at 8%, that in effect means that in a generation, in 20 years, we'll quadruple the size of the Indian economy. So we'll go from 2.5 trillion to 10 trillion people by the time India turns 100. So this is a great chance for us in the sun. There's a crack open because of what's happening in the world, and India being a large economy can take advantage of that. And I do see signs that we are taking advantage of that.
So just to bring it back to the budget, is there a lot that needs to be done or you really expect to happen? Because a lot has happened already. I mean, I don't think the corporate sector has had it so good in terms of taxes ever. So are there expectations from the finance minister, or I think stock markets are happy if there is status quo and not much is done in this budget?
Udyan, budget is obviously a big media event, and it used to be a terribly important event for the Wall Street, and its importance is diminished. Of course, there'll be, as the budget date rolls around, people will ask what will be the fiscal deficit, will there be an inheritance tax, all these potpourri of demands and counter demands will go on. But the best analysis I read of the budget for the intellectual framework was by an editorial by Nainan in the Business Standard in a pink paper, when he said that India's tax to GDP ratio now, not tax to debt to GDP ratio, is going from 50, 60 to almost 70, 80% now. And interest as a percentage of our budget is now going from 34% to 41%. Tax to GDP collection remains at about 10% over the last decade. So he says if India needs to raise new revenue, which of course we need to do, how do we do that? We can do it either by expanding the revenue base or increasing taxes. And I hope this budget will lay the intellectual framework that we have tried socialism, unlike what China is trying now or what the US is trying now. It doesn't work. We need to make a bigger pie. And the budget will, lay a lot more emphasis on making a bigger pie. So then we can distribute the money more equally. So I think the answer to the budget would lie in, as we always do in the government's, how it handles its fiscal picture. Will the deficit come back from 6.8 to 6%? And what are the streams to raise more revenue? Because clearly the government has had buoyant tax collections this year, but there will also be a lot of expenditure on behalf of pandemic. So I think in the budget, I would look at those two numbers. What percentage is being taken away by interest rates, and what is the government doing to fall the revenue shortfall that we seem to consistently face. I think the other things are, par for the course. Some are give it, some take it. As long as they don't come with the inheritance tax, I don't think the market will be too disappointed.